tolerance. There's not one right or wrong way of doing it. It all depends on how you manage your risk and how many contracts you can trade. If you're doing one lots, then that's fine. You're looking at the level. If you're doing multiple contracts, maybe you scale in a point above and below, maybe half a point above and below, all dependent on your risk tolerance and how you want to manage that. But either way, we are trying to scalp, and we're just kind of floating around here. We have different price action trades also that occur in addition to these levels that we gave out, which are support and resistance. Price action trades require some volatility and some movement, obviously. And obviously, we are dependent for the market for those opportunities. And obviously, we're going to get, there's going to be, if there's some volatility, we'll be able to get some opportunity. If not, unfortunately, we're not going to get that many trades for the day. But that's the way the markets are. They give and they take a little bit, and sometimes volatility is also something that we can't control. We only trade the volatility that's given to us. We don't create it. So we kind of missed. We didn't miss out. We had 91 up on top. We got up to 88 and change there. And coming back down, if you look at the chat window gives you the levels that we gave out this morning, and they're a guide to the day. We can tweak those a little bit depending on price action. We can adjust those. There's not, they're not etched in stone. They're there to help us, guide us through the day. Our levels are there to use all day long. They are, we focus on the morning hours to give us our opportunities to trade. First couple hours of the day, I think, gives us good opportunities based on the methodology that we have. There's more volatility, there's more volume, there's more opportunity, there's more ebbs and flows. Obviously, that's data dependent as well. If there's any news coming out or not in the afternoon, like let's say Fed releasing their, what they're going to do for interest rates, which we like to stay away from. We don't like to trade, definitely don't like to trade the Fed stuff for sure. And definitely try to stay away from the afternoon trade, as the dynamics in the afternoon do change as the day goes on. So we try to focus on the morning hours to give us our opportunities to trade. As we come down here, we got a little support at the 78 area. 81 is the settlement price. For those of you who like the settlement price trade, there's different trades that people like to trade. There's not, you have to find the niche of trades, those trades that you can recognize, that can visualize, and then the second part of recognition of the trade is the execution part of it. So some people can recognize the trade and afraid to execute. Other people love to execute but can't find a trade, right? So putting the two together is what we're trying to accomplish here. Also, we're also looking for reasons to trade. We don't just willy-nilly think that the market's going to go one way and we're just going to jump in the middle of a move one way or the other. We like to wait for the market to give us an indication of a setup instead of just going in there and jumping in on a trade. So that's what we like to do here on an everyday basis. We trade here every day once the market starts opening up, and they open up at 8:30, even though they're trading beforehand. And then we go from there. I think the volume it used to be on the floor when the floor was open. The exchange, the big S&P used to open up at 8:30, and I think if you notice, if you've been trading for a while, that most of the trade does start, or the volume does begin at around 8:30, even for the minis. All right, if those of you who did take the settlement price trade there, you got a nice little rotation here off of it for a little quick scalp. Again, we have price action trades, which the 81 support here was one of those price action trades. The settlement price is a trade that we like to look at, and I don't talk about those too often. That's part of our. I mentioned them. I did mention the settlement price trade, but that's part of our coaching classes that we offer. Anything that anybody that's interested in kind of getting an idea of how to scalp these markets with the methodology that we have, we do offer a education course to help you try to hone your entry points and look for trades, understand why these trades are there, also understand why the levels are there, why we would find them, why we would pick them, and then trade them. So we do offer, if any of this stuff interests you, let us know and see what we can help you with. All right, again, if anybody has any questions at any moment, please feel free to ask in the chat. We don't mind any questions. You can put those questions right in the chat and we'll answer them for you. All right, at 9 o'clock this morning, we've got Richmond Fed Manufacturing Index coming out, and that could be a market mover. I don't know, but we also like to stay flat when numbers are released. That's what we would like to. We don't. We'll let any kind of energy that comes out of market fundamental news that's released. We'll trade the energy afterwards. Sometimes there's a lot of energy. Sometimes it's a dud and nothing happens. They're not going to try to guess as to which numbers are going to be giving us opportunities to trade. We just never know how the markets receive numbers and how they react to them. So given that, we'll just let it be and just wait for a number to be released, and then either put your trades on or re-enter some trades. Like for instance, my orders are in place right now in case we get up to one of our levels, and then there's actually price action trades, which I said probably the settlement price there was price action trade, which I kind of mentioned in passing. If anybody was interested in a little scalping there, or if you wanted to get long, there was a good reason to jump in there and trade that opportunity. So again, all we're trying to do here is take advantage of ebbs and flows of the market, and finding areas where we believe the markets will give us those opportunities, and then just kind of hope that the market moves around to give us those opportunities. Like I said earlier, we are at the mercy of volatility. We don't create it. All we do is trade it. So consequently, we're looking for those opportunities if the market gives us those opportunities. If you're a trader and you traded yesterday afternoon, you can tell how it was extremely slow. Not much was going on. And, we traded in the morning, had a couple of trades, and then, but that was about it. We average, like I said, 4 to 5 trades a day. And we'll kind of just hopefully that we can get average is the key word there. So VIX is trading at a 13 handle. Now, VIX is the volatility index, which is an indicator of how busy we might be getting. 13 handle is pretty low. We like the trade as far as scalping is concerned, probably in the mid-teens. That'll give us some good opportunities. But we like I said, we take what's given to us every day and then move on. So markets have ebbs and flows as well. When they'll be busy, they'll be slow, and either way, we're here every day and have to always temper your expectations every day based on the volatility that's going to be there, and it's just nature of the beast. What can I say? All right, so we did quickly. So that's an introduction to what we do here. If anybody again has any questions, feel free. Or if you look at the chat, you'll see the levels that we have. We're going to use as a guide to the day. So resistance levels and support levels are areas where we would sell and buy respectively. Resistance are areas that we feel markets will maybe not press through and give us a scalping opportunity. Remember, we're looking for ebbs and flows. So that's one area where we're going to be looking to sell a market. And then on the downside, support levels are areas where we would think we would want to buy the market and try to take advantage of the ebbs and flows. So support levels and resistance levels, they are out there. And those are areas that we feel might give us an opportunity. Now, obviously, not all of them will work. And that's why we have stops in place. So if you were looking for 2-point rotations on these trades, and each point on the mini S&Ps is $50. it's $50 a point. So, and we're trying to get about 2 to 3 points on each trade with each contract. And so, do the math, depending on how many contracts you trade and what what your stops are, how much your account balance is, and what percentage of that are you willing to risk on each trade. All of that stuff is obviously in there. The Bollinger Bands are the blue bands that we have, and they're set at about 2021. The Bollinger Bands are kind of expansion. It's the only index that we use, and it kind of gives momentum, kind of whether there's selling or buying going on. Don't exactly know the definition of it, but I don't use too many indicators, so that's why I don't try to look up the definition of whatever indicators that are out there. We just kind of take our guidance from real-time charts, and hopefully that'll give us good opportunities. Now, we do use a Bollinger Band. We feel it can keep us on the right side of the market, and there we've incorporated that into our methodology here. And obviously, sometimes we need when there's some volume and volatility going, it's a little bit easier to kind of trade and use the Bollinger Band. When it's flatlining like this, it's kind of tough to get too excited about it. As you can tell, we have our green band there is a 200-day moving average. We have on our charts from right to left, we have a 5-minute bar chart. Middle bar chart there is a 60-minute bar chart for minis, and then on the left is a bond chart. Sometimes we feel that the bonds will give us some indication maybe where S&Ps are going, so we kind of keep that up there, and so that's what we are trying to do here. So good questions. Again, feel free to ask. We definitely, obviously, if you're new to trading, this is it's a good way to learn, good place to learn, and try to understand how to trade equity futures. And if you're experienced trader, maybe we can add a couple of setups to your repertoire there so that you can maybe look for additional trades to jump in on and trade. Those are all different opportunities that you have here. All right. I wish I could trade, but I wish I could start, market could start trading, but there's nothing. Just trying to see where we're going to go next. It's kind of just going to hang. Look, we're all-time highs. I mean, what more do you want? He's complaining. All-time highs, and he's complaining. Look what I've done for you. I can't help it. It's not moving around. Not my fault. Got an all-time highs, and you're complaining. I got you here, and you're complaining. God. Well, like again, I don't have any power to get anybody anywhere, so we're just joking around. Obviously, it was just that we would like opportunities to trade. As you can see here, if you look at the 5-minute chart, in a very narrow range. I mean, staying in a 10, well, not even 7-8 point range for most of the last 3-4 hours is kind of tough to trade as a trader. Traders like movement, like volatility, like opportunity. And obviously, as a trader, you definitely have to show some patience in regards to trading and waiting for opportunities to present themselves. Otherwise, you can get yourself into a pickle if you just keep trading for just because you want to trade. The danger here is, like I said earlier, the more you see the markets are flickering around up and down, But finding areas that that you feel that you have to jump in is key, not just trading because you see the markets moving around in a very tight range. We're not range players. Obviously, there are some traders who like to play the range. They get themselves, the market gets in a range, and they buy and sell the bottom and top of the range. But we try to stay away from that. It's not my favorite. Every time I decide to do that, it seems like I get myself in trouble. Every time I do it, it decides to break out of that range. So I decided, you know what? After a while, I'm not going to trade the range thing anymore. But hey, some of you like to trade the range. Look, like I said, there's different kinds of traders here, all kinds of traders, and there's not one right or wrong way to trade. It's just a matter of incorporating a methodology that you're comfortable with as a trader, and then that's what we try to, impress upon anybody here. If you're going to be working with us, is find the trades that you can recognize on the screen, on the charts, that have good reasons to put on those trades, and then see what happens when it gets there. Obviously, we're not always going to be right because it's just what happens here in trading. But keeping your stops in place eliminates the being wrong factor, and then you always have the opportunity to look for the next trade when it presents itself. Now, it could not present itself for a while, for a couple of hours, for an hour, or wait for tomorrow. But whatever the case may be, you have to show some patience. Traders are impulsive. It's in their DNA. Again, we have some new people in here, so please, if you have any questions, feel free to ask in the chat. You can see that that's the way you can communicate with me. And I'm no problem answering answers. Oh boy, I'm in Chicago, and it's a nice little. Had to get up early this morning to my driveway is a sheet of ice, literally a sheet of ice. It is nasty here, but it's kind of warmish. It's like hovering right around the freezing point, 32 degrees. So it's nice in regards to temperature, but it's right at 32 degrees, which obviously is that freezing point, which, it's makes for a very touch and go. So I was up early this morning taking in the driveway because we had some people come in, and I was slipping and sliding.
What do you do with a sheet of ice besides leave it alone?
You got to put salt on there.
Oh, you put salt on it. Okay, it will melt it after it's already formed.
Yeah. Oh, yeah. It definitely will melt it. As a matter of fact, the salt trucks around. That's why I think in Tennessee, Memphis area, that they got all the snow and cold, and everything's freezing over because they don't have the salt stockpile that the winter cities have. So I have a couple bags sitting in my garage. So I actually used almost a whole bag just to get it out. I mean, it's a nice little thin sheet of ice, and it melts it as long as it's what do you call it, above a certain temperature, like I think it's like 20 degrees or 15 degrees, it'll melt it like right away. Yeah, Michigan. Yeah, you guys know snow and ice. You guys are that this ice storm is going across the mid part of the nation right now. So it's nasty. It's right at we've had some really cold weather here, and then the ground is cold still, and you get this little ice rain or rainy ice or whatever, and it's nasty. All right. Again, the little tight range here continues, so that's why we talk about snow and ice. And it's supposed to get like nice in Chicago. I mean, nice, relatively speaking, I guess. I said it's going to be in the 30s here and 40s. I guess, and people in Florida would say, "What? They got the fur coats out." But 30s here, 40s is beautiful. Okay, I'm looking at the extended forecast here. Now, extended forecast doesn't really mean much if you live in Chicago. But the extended forecast for next Thursday, so that's about 10 days, 50 degrees here. So I don't know. That's going to happen. Just come close to that, I'll be happy. 40s is fine. But the whole week, looking at this extended forecast, is above freezing. 37, 38, 39. So looks like the snow is going to melt around here and get us into February. So that's kind of, almost. To me, I look at it like this. Once we get to March 1st, to me, spring is here. So that I look at it. I get through December, February, January and February. And then once we get to March, I'm feeling like, all right, spring's here because we do have some snowstorms maybe in March and April. April rarely, but in March. But the weather, gets warmish very quickly after that. So most of the snow will probably melt. That's how I look at it. It makes me feel better about getting some warmth back into this city. And then the other thing that I like to look at is, looking at when we're trading the March contract. Oh, I'm already feeling like spring. So, all right, this is what Chicago people do to kind of deal with cold weather. Think about spring.
Hey, if it works, it works.
Hey, not everybody can live in Florida or Texas and have nice. When it gets to 30, you're freezing.
Really, it's going to be 70 here the next couple of days.
Yeah, see, that's what we're getting in the next week or so. It's coming up here. Yeah. Yeah, so that's it. That's what happens when you got nothing going on. Is what happens when you got nothing going on and talk about snow. All right. Again, where you can see how tight the ranges are. And again, the only maybe opportunity, depending on your aggressiveness, was a little buying opportunity there at the 81 area. That was the settlement price, which is something that some traders like to use, or we like to use sometimes as one of our setups. Price action setups. And again, I don't talk about all the price action trades that are out there only because it's part of our education course. And there you go, Don. You got a job. Somebody's willing to wants your help.
It won't be long. We're already start working on ours. As soon as I finish kissing this frog that we've got going on here.
Philip, you asked for one thing, now you start piling on. Look at that. So you're asking for more things to do. That's what happens. You fill up an inch, you want a mile.
That's it. I just stand in the garden and talk over it. It fills it up.
It's true. All right. Again, the market here, as far as let's see if we could talk about something here besides the weather. Let's see. Okay, here we go. Major Wall Street indexes have notched new record highs with gains lifting the blue chip Dow above 38,000 for the first time ever, and the S&Ps ended up to all-time highs for the second day in a row. Um, some analysts expect the uptrend to continue, predicting that the S&P could reach 52 to 5,500. Whoa. And the Nasdaq around 18 to 20,000 before the end of the year. Wow. While the Federal Reserve takes a backseat as it enters the blackout period ahead of its first meeting of 2024, earnings will dominate the headlines this week, with results from Netflix and Baker Hughes due out today. So yeah, we are surprisingly enough in earnings season. So now most of these earnings for most of these companies, and there are a bunch of them coming out this week. The big, especially the tech companies, I think later on this week. I don't know which day, but they usually announce them after the market closes. So if there's going to be any volatility, it'll probably be the next day if one of them misses, or stuff like that. So so this week, and then next week is obviously the Fed meeting, which again they are looking at talking about interest rate cutting. And now there was a 80% probability prior to last week of a March first rate cut in March. The probability for that has gone up to down to 40% because of the way a couple of the Fed governors were talking last week. So we'll see if that has anything to do with it. Now we do have a number coming out here momentarily here at 9 o'clock at the top of the hour. So in about a minute or so, Richmond Fed manufacturing index. I don't know if it's going to move the market or not, but I was going to say we want to stay flat, but got nothing going on, so we are flat, and we're right here at our pivot. So very neutral, very no idea what's going on. Just kind of hanging here, waiting to see where we're going to go next. So let's be patient here as we see if this number creates any volatility or not. So the Fed is coming out with having their blackout period, which they're not talking to anybody. So we don't have any more Fed speaks, at least not this week. Fed speaks have been moving the market when they start talking, and that's why last week there was some big move to the downside initially, because a couple of them said that the rate cuts are not going to happen in March. They're going to occur later. They hinted at it, and we'll see at this meeting if the conversation with their minutes or the conversation and their release the statement confirms that or not. And then obviously, I think if he has a Q&A, then we'll see if that, if he answers any of those questions that way. So, all right, the number is out. You can see we moved a lot. Not. All right. Again, it's not really a big market mover, but hey, you never know. I mean, we did yesterday. We mentioned that this week there's going to be a GDP coming out on Thursday, which could create some volatility, and the PCE number on Friday, which is the index that the Fed looks at to gauge inflation. It's one of their indices that they look at for inflation. And that's coming out on Friday. So we'll see if give us some volatility in the market or not. So we are, and the market has really obviously done well with all the geopolitical situations going around the world. You got this, obviously you have the Ukraine situation going on, kind of discounted that. You got the Israel situation, kind of discounted that. You have this U.S. and U.K. military force in Yemen with the Houthis, and market has discounted that. They're just taking all that into like it's okay. It's what happens every day, so it's nothing, not a big deal. It's amazing, right? It's just it just doesn't. I don't know. It's haven't dealing with all these geopolitical events and discounted them. Oil, by the same token, is not really getting affected by it too much. The United States, I read yesterday, is producing most oil that's ever produced, and is the largest producer of oil right now, believe it or not. I guess they decided to finally stop giving the money to Saudi Arabia and all those, and they're just going to produce their own. I guess they still buy it, but I don't know how that affects the market. But the crude oil is not really. It's around $73. Not outrageous, not terrible, not just kind of hanging.
What
All
squirrel
right.
put that order in at 387?
Somebody did.
Yeah.
Yeah. You? Is that you?
No, I didn't get filled.
You didn't. Oh well. Yeah. That's terrible.
That's what I'm thinking. I'm looking, where'd that 300 lot come from?
I guess you're behind that one.
Yeah.
Man, 300 lots. This, I can see here if you look at the market. Look, there's more than 300 lots traded sometimes at certain prices, but when you show 300, there's probably. I mean, the market's assuming that there's more behind it. So let's put it that way. And so it trades off. Look, and what usually happens with these big orders is, like there used to be a saying on the floor that the market goes to the orders. So they always like to keep those big orders in there, and somebody will take them out. Just seems to always happen that way. Somebody wants to jump in there and take that order, whether it be a trader or an institution or whoever.
If that was a stop, they'd run up there and get it.
Yeah, no, it's just like you. You got your order there. He's got his order there. He's going to wait for it.
Yeah. But he probably has a good reason. I just don't have any sense.
Yeah. Well, these guys trade this big size, and they just are looking for certain areas. And they'll wait for it. They have the ability to wait for it. Again, if anybody has any questions, feel free to ask. You can ask in the chat. Just type it in. All right. So like I said, the market's been handling a lot of good things, a lot of things that in the past would create some volatility. Instead, right now, I think the only market driver for the most part is in interest rates, inflation, stuff like that. So they pretty much discounted everything else. Amazing. And we're in the middle of an election year, so again, they kind of, I don't know how they're going to manage that when the time comes. Not for me to figure out. Oh, we would love it to just give us some volatility. That's all. It doesn't matter. It doesn't matter what happens. All right, there, Philip. You have a great one. Have a good day. And like I said, we average these trades, and if we're not going to get that opportunity, that's fine. You're getting me to talk a lot here because we have a lot of new people here. So please ask questions if you have them. We would love to talk about the trading that's going on, but unfortunately, as you can see, it's just hovering around our pivot, both sides of our pivot here, and not really doing much.
You need to give a few more numbers to the downside so it'll go up.
We didn't even get to one level. All right. See what else we got here. We do have the New Hampshire primary. Let's see what happened. Probably no surprise there. Again, like I said, we're in the middle of and the market's not caring about that either. All right, we are just range bound, as you could tell. Tight little 5-point range here. Again, if you're a range trader, again, you're doing okay.
Are you showing a 300 lot at 87?
Yeah, 311 right now.
Yeah.
You're 299.
Yeah, it's all right. I'm not sitting in this hole forever.
I mean, you are fighting the blue band too. You are just
Yeah.
you love it. You love fighting that blue band.
I do. That's it. That's the only explanation I can give you. You just can't cure stupid. I'm the walking poster boy for it. But I like to try.
Yeah. And like I said, we have all kinds of traders here. Just because I don't have I didn't put on any trade yet, doesn't mean that you don't. Maybe you see something that I don't see, or maybe you're trading a range, or maybe you like it, or maybe you're trading moving average, or maybe you're trading earlier support. Again, every recognition of a trade is important, and that is an individualized thing. We try to obviously use be a little bit patient here with the levels, and that doesn't mean that other traders are not trading because they see something that they like. And again, everybody here has got their own way of trading. All we're trying to do is help you find different opportunities, and maybe add to your repertoire of trades if you are been trading for a bit. And so that's why Don's looking for 87, and I'm not doing anything. That's okay. Don, by the way, for those of you who are, can we post the levels up for Maureen again?
Sure.
Don has helped me out. He's been with me for quite a while now, and when I need a break or can't make it, he is more than willing to help me out. I appreciate it. And he knows our methodology, knows how to figure our levels, and can add his own twist to a different view of things sometimes. And that's what I like. Again, like I said, there's different ways of trading, and he's. I use a 5-minute chart. Don uses a minute chart sometimes, and that's why he can maybe find trades that I'm not looking at. But then I'm also talking to a wider group of people, so I try to keep it more, condensed a little bit or safer. I don't know what the right terminology is. Did you get filled? Oh,
heck no! I moved it down, and somebody else dropped a 200 lot in there.
Yeah, I see that. I think he moved it down too. He took his 300 out.
Yo.
He's messing with you now.
It's all right.
You'll get it. Really messing with you. There you go.
I moved it down to 50. It's 86.50. Now we get the 87.
Yeah, you knew that was going to happen, right?
That's all right. Let's see. See if we can hold that last one to around 89. Let it eat. There's something to be said once you're in a profitable trade.
Yeah, you need to take some profits. That's a key. All right, we're just kind of hanging here in this range. So again, it's a tough little range to trade. You need if you did pivot there work, the lower end of the range there worked. I mean, I don't know if I'd be. It's just one of those things. I'm not. Again, I'm not. If you're selling the top end of the range, yeah, maybe that's a good trade if you're looking for that. But again, I'm not a range trader. Not my cup of tea. So every time I do it, I seem to think market runs away from me for a bit. So just stay out of it. But again, if and you do get different looks if you're using like a 1 minute or a 3 minute chart versus a 5 minute chart. So you do have different opportunities. Again, we're based our setups are based off of the technical analysis that we do. So that's why you can maybe when the market gets slow, you can look at different time factors on the charts to give you. On the bars charts to give you maybe something else. But for what we do here and everybody, I'm looking at the 5 minute, and we'll just stick with that because when the market gets really busy, 5 minute is probably really a good indicator for us. So, all right, we're just again coming back down here to our pivot again. If you played the range game, you're selling the top end of that range, and covering it back in here again. Like I said, not what I like to do, but hey, it's not something that I even like to even mention. But we've been in this range for so long today. I can't believe it. And this is when a lot of the trades should be happening. Just to give you an example, we're like 45 minutes into the day. Usually would be around 500,000 contracts, 600,000 contracts. We're at 300 and change. So you can see how they really there's no movement, no volatility. Again, the market is just kind of waiting up here. We're kind of trying to see where the next shoe is going to drop, whether they're going to confirm next week, and maybe look for earnings results this week as well, as some of the big hitters are going to be releasing some of their earnings, and that's going to maybe affect the market one way or the other. And then especially they're going to be looking at the what they're going to prediction for the guidance for the future is going to be as one of the markers for whether the market's going to continue to go up or not. All right. On top of this range here, our upside resistance is up at the 91 area. Yes, it's been a very tight range for last couple days actually. Listen, speaking of tight ranges, I mean, you have to remember that I don't know, prior to 2007 or 8, when everything went crazy with the housing situation and what happened there, the 10, 15, 20 point ranges were the where people were looking at every day. That was what people were trading.
I remember that.
Yeah, and not only that, but you see, if you look at the ladder ticket, you have 100 lots up and down the ladder ticket. There used to be 400 or 500 lots at each price and then the ladder ticket, and the market traded in 10, 15 point ranges. So that was like 10 point range was a big day. Well, 15 point range was a big day, but 10 point range was like a normal day. And but onset of electronic trading, onset of the volatility that occurred after 2007 with the housing issue created more volatility, and then the crazy swings that the market started to see. And then now you can see, 100 lots up and down. Like I said, there used to be 400 or 500 lots, 1,000 lots in the queue, and that's they traded in a tight little range. But now we got a 15-point range. The last two, well, we're trading in a 7-8 point range today. That's still slow. But we never. You see that show you the differences. We've gone up and down this range. I don't know, 4, 5, 6 times. And, in the past, in those days, we used to, trade really tight, maybe go up 2, 3 points, come back a point. It was really watch and paint dry. But then your goals were different. Your setups are different. We have to take into consideration volatility, and that's why we have our levels kind of spaced out the way they are. And volatility will come back. You don't have to worry about that. All right, we're going to just play top of the range here, slowly drifting back, trying. Again, can't. Doesn't want to do anything. All righty. Another thing you have to remember is that rally markets are very difficult to trade as a trader. They don't really move that much. Traders love markets that go down. The volatility is pumped up a lot, and the VIX goes up. But man, when they start rallying like this, it's a tough little trade. So we're hanging here at all-time highs. Tough little trade. But it is what it is, Again, if anybody has any questions, feel free to ask in the chat. And obviously today is kind of a slowish kind of day, but it does, when we have movements and volatility, we can talk about trade, and we talk about trading obviously here every day. Talk about the setups, adjusting entry points sometimes. Obviously, when there's news coming out, we kind of give you that information, let you know when there's some news coming out. Really today at noon Chicago time is the only additional maybe market mover later, which is a 2-year note auction in the bond market that could move the market, because like I said, interest rates move the market these days in auctions. So we kind of try to inform you about those kind of things, and we let you know early on if you're going to be trading all day what's going on. But again, we are here every day to try to help you, kind of guide you through the day, give you areas to focus in on, and obviously when nothing's going on, to listen to me talk and Don talk. That's all we can say when it's slow. But hey, it doesn't happen. It's not every day. And usually there's some opportunity somewhere along the line. Like I said, Don found a trade somehow there in that mess in this little tight range, and doesn't mean that everybody doesn't have to trade, or maybe you have some trades and you want some help with. Ask in a chat. But we do this every day here on an everyday basis. So. All right, we just come back into this little tight range, come back here to our pivot. We're basically trading both sides of our pivot here. I just I can't even like tell you I think it's going to go up or go down. It's not. It's got no feel. It looks like it wants to uptick just a touch, but like I said, got no feel for it. All right. Again, anybody have any questions, any comments, any thoughts, and any ideas? Please put them in the chat. I don't blame you, Matt. Obviously, today is one of those days, right? So, but you never know. You just never know. The most important thing is to be patient and to wait. You know, the other saying, watching grass grow is probably more exciting right now than this.
Yeah, at least it'd be warm.
That's true. Sunny. It's true. All right. Well, look at that. We're moving to the downside here a little bit. We got a little support down at we got a 78. I see, it always surprises you. You just never know when the market is going to give you something to not do or do. And of course, it goes down to 79 and a quarter. What in the world? They're talking about, how did you miss that one? I put my orders in at 79, 78, and 77. Those are where my orders are. And we drifted quickly down to 79 and a quarter, which is against my 79. And it obviously did not get filled. So you see how Don did not get filled at his exit strategy above, and I did not get filled here. So that's what we do. We waited the whole time and we didn't get filled. Now, if the bar closes here at the 79, my entry point against the 78 on top is going to be a little bit riskier. I would probably cancel that one and leave my 78 in there. Again, some other people will probably leave the 79 in there, but there you go. Same thing happened to me. Same thing happened to Don. I have my 79 order in there, and I did not get filled because it went down to 79 and a quarter. Can I tell you? Happens to everyone. There you go, Don.
I got my 80, so I'm happy.
No, okay, great. See, Don's in at 80. I put in 79, and I did not get it. But that's how. Yeah, go ahead.
I had 80 the last time we got to 81, and I had to end up jumping on the 83, looking for that 87, and it took forever.
Yeah. All right. Well, that's annoying. It happens. So again, you have to adjust. So the bar closed here on the 5 minutes for me, so I'm going to adjust a little bit and take the 79 off and leave the 78 in. Just one of those things. And if you're really more risk averse, maybe you're not going to trade the level at all because you really want to get it on that first rotation to that area. And it's an area that we're trading. The 78 is the level that we gave out this morning, and I put my orders in a point above and below and the level. So I have 79, 78, and 77 against my support level at 78. So I went down to 79 and a quarter here, and I did not get filled. What are the option symbol? The option symbol. This is ES. Yeah, it's not an option. It's a futures contract. So the support level we gave out this morning, we will repeat Can we repeat the levels in the chat?
Yes, sir.
Those are the areas that we're going to focus in on. You can see our first support level that we gave out these levels this morning. And you can see the first support level there is 78. So that the market drifted quickly down to 79 and a quarter there. And I have my orders in place there to get long against my support levels. Yes, my orders were to get long against support levels, and my orders are in to get short on resistance areas. So you can see how, again, depending on your risk tolerance and what we talk about in our education course, we explain the risk to you, and we explain telling you that, well, if we got 79, which is another tick, and we had this rotation, then you would have made money on the trade. So now, if you're a more risk-averse trader, you would probably not even place the 78 or leave the 78 in there, because technically it worked, right? But we missed it by literally a tick. I missed it by a tick. Don got it. He had 80. He put it in at 80. Maybe Don scales in differently. Maybe he would have had 80 and then 78. Maybe he would have probably bought the 78 as well if it got back down there.
Yes.
So again, you're right. So he got in at 80. He liked 80. I like 70. I take a little different approach. I take a little safer approach to the trade because of the fact that I talk to people, and a lot of people are out there. So I missed it by literally one tick. And so depending on your risk tolerance, and I would have gone long there because that's support. And you can see there in the chat that those are the levels that we use as a guide for the day. And my orders are already in place, like I mentioned earlier. And so I just have to be patient and wait for the trade to create itself, to come down to a support level that I like or a resistance area that I like, and then I'll trade that area. And how I find those areas are based on the work that we do, and how we can explain those in our coaching classes that we offer. If you want to expand your knowledge a little bit, or add to your knowledge, or learn how to do this at all, because this is like what we like to do here, and we do this on an everyday basis. As we come back up here to our pivot, so if you did get long down there, this is probably a good place to get out, and a nice little trade if you did jump in anywhere around that 78 area. So again, like I said, I have to adjust my risk now to the downside. If I was going to trade multiple contracts, I would probably adjust that a little bit too. I'm very kind of bummed is the right word that I didn't get my 79. The symbol is ES, and the month is for March is H. We're trading the March contract and the mini S&P. Again, charts are differently. This is a ES chart, March contract, ES March contract, and mini S&Ps. If it's another way of looking at it. H is the symbol for March. I don't know how the each individual charting system has their own way of doing it. And then you need a ladder ticket or a platform to trade. The platform is where you can enter trades. Obviously, the charts are one thing. I think, I think so. Yeah, so that's where. So you need to be able to have the charts up, and then have your dome or your ladder ticket or whatever you want to call it, your platform, so that you can trade but you place your orders in. Yesterday's levels, sure.
I got them right here if you want them.
I have. Do you have them printed up?
No, I don't.
No, don't put them on there. I'll just say them out loud.
Yeah.
The pivot is this is yesterday's pivot. If you want to write these down, You want to compare the yesterday's pivot was 48.86. It's supported 80, 73, 65. I'm not even going to give you all of them because we didn't really extend the range that much. So 80, 73, and 65, and upside at 93, 49, even, and 12. All right, so, and we kind of stay within that range pretty much all day. I think we did get down to 74. It was if you traded late in the afternoon, it was a nice little buy there on the lows. That's a little spike here, right here. So it got down to 70, 73 and a what was that yesterday? 73 and a half. So again, like I said, if you scale around it, maybe you got 74. I was not here, so I did not do anything in the afternoon, but some of you did trade. The levels you can use all day long, even though we'll be here for a little bit longer, but the levels are definitely there to use all day long. And again, the opportunity here is to learn how to find levels independent of myself, to learn how to enter these trades so that you can take advantage of these opportunities, and to show you how you can find trades, because recognition of the trade is one aspect of trading, and the second aspect is the execution part of it. So the combination of both of those gives you your setups. And what we try to do here is work with you to figure out where those areas are that give us those opportunities, those inflection points. And again, the goal of our education course for you to be independently doing this without having to listen to me talk all day long. But we're here every day, and that's the one thing. And the reason I started this room actually was because I was up in my office and I was so bored. And you can only watch CNBC for so long, and then you just so I needed some interaction. And I came from the Florida Exchange where I chit-chatting with a whole bunch of people standing around me. So when it was slow, it was okay. I mean, you talk about the weather, you talk about family stuff, you talk about the Bears or the Bulls, whatever. And so it was, and then when I came up to my office, I was like, oh my God, this is brutal. So we started this room a while ago, and that's where we're at. All right, we're coming back down here to this first support level here against 78. Again, depending on your aggressiveness, and this is where we can tweak these levels. If you're more risk averse, maybe you're not taking the level at all because of the reasons that I said earlier. If you are adjusting your entry point, maybe you're not entering there at 79. Maybe you're going to leave the 78, and maybe you're going to trade less contracts because we technically kind of had a nice rotation against that level, even though some of you got filled, some of you didn't. Again, and that's going to happen. If you're trading and you're scaling, and scaling means getting at different prices around an area, some of you are going to have some entry points and some of you are not. Only because just the nature of the beast. Some of you are going to see an entry point, like Don said, he was in there at 80, and that's fine. And so, doesn't mean that the level didn't work. And if you're more risk averse, maybe you're going to, cancel the order. Maybe you're going to adjust your number of contacts you trade, so there's different ways of handling risk and different ways of managing it. And that's what we try to help you with. All right, we're coming back down here to these interim lows. Low support here at 78. Again, we got down to 79 and a quarter. So again, depending on how aggressive you want it to be, you got to be a little bit careful around here. And again, all we're trying to do is take advantage of ebbs and flows of the market. And we had a nice rotation down the, well, we've been range bound most of it, and we continue to be range bound. I see you tweak a little levels from one. Well, no, I mean, Look, you got yesterday's levels. They're not there to compare day to day. We get the levels every day are new based on market movement. You can see by looking at the chart, we're in a very tight range. So these levels kind of repeat themselves a little bit based on price action. So, I mean, if you looked at Friday's numbers, Friday's numbers, I was giving you, we were down at 48.20 something. So those levels obviously are different than today's levels because we were in a different place. You just see you compared yesterday till today, and today is only because and you're telling me that they're the same levels, and or little has changed from day to day, but that's not necessarily true. And like you said, it's basically because the volatility and where we're at in the market is it's kind of made us have to repeat some opportunities, some levels. But if the market moves, those numbers obviously are going to change. I mean, give you an example. On Thursday, our pivot was 47.86. Excuse me. So we were 100 points lower on Thursday till today, and that kind of makes sense if you see what's going on in the news. The headlines is saying, "Oh, the stock market's making new highs," because that's where we're at between Thursday and today. So today, if you're comparing yesterday to today, yeah, we are definitely overlapping, and the charts are telling you that we're overlapping the levels because look, we're in the same range. Basically, this is the range from yesterday, from up here at 98 down to 75 ish. So we've been in this range since yesterday afternoon, after yesterday morning. So at some point, this is a very tight range for us. So, but yeah. For us, again, we're all dependent on the market, day-to-day movement. All right. Okay. Well, again, we went down and retested that low at 79 of course. So now I will tell you, because we closed another bar, that the 78 level is very tenuous. We can easily break through it based on the price action here. Again, depending. So I would be very hesitant if you're very risk averse to even look at the 78 area, simply because of how the market's trading. And gets us back to what I said earlier, that everybody here trade. You have to tweak those levels that we gave out, right? They're there to guide us through the day, but then you have to look at the price action and then determine, how. If you didn't get filled at the 78 area, it becomes a lot more riskier at this point. So you have to take that into consideration here as a trader. That's why when somebody asks me, "Oh, what's your track record with your levels and how you trade them?" Again, it's very hard for me to answer that because, like I said earlier, Don traded a level, I didn't, and that's fine. And but now, if we come back down here and we get through 78, I would probably be if you're more risk averse, probably not even use the level whatsoever, simply because of the price action, and that's just it is what it is. It is that's how we make adjustments as a trader because you are trading. That's what traders do. You can't just like go blindly and just take the level because I said it. All right. Again, now we're coming down here to these lows. Again, I'd be a little bit mindful of how it's trading down here. I'd be a little bit mindful of the 78 area if you didn't jump in earlier. And if you're more risk averse, so you're probably looking at 72. Again, if anybody has any questions, feel free to ask in the chat. We don't mind questions. It's just one of those like kind of slowish days, which is going to happen. Alrighty. Again, we're coming back here to these interim lows again. Got to be a little bit careful there at the 78, like I said. But you can see they do have some orders there in the order book there. 300 lots, 400 lots, 200 lots. If somebody wants to buy it in this little area here, let's see if they keep it in there or not. And like I said earlier, the most important thing is to be a little bit patient and wait. You will get an opportunity. It just depends on how the market reacts and then how you manage that once you get in. All right, we're slowly coming. So we got a little bit of speed here. Again, we talked about the 78 area being a little bit riskier, and that's kind of where it did. We did drift down to 77 there. And that's what happened there. And that's why we suggested maybe depending on your aggressiveness, you adjust that 77 and maybe look for, you're looking at 72 area next. Again, all of that comes from the price action, how the market reacted prior to coming down here to 79 and a quarter. So we have to tweak it a little bit. And maybe if you're adjusted a little bit to the downside, maybe you got in there at 77. If you didn't, that's fine. If you're looking for 72, that's okay. All right, now we're kind of hanging here on these lows. Again, you have to understand the price action there to make that adjustment. We'll try to help you through it. And like I said, we'll see where we want to go next. Looking at the 72 area. All right, you can see here in the market's under a little bit of pressure right now. All right. Again, if you got in there at the lower end of your range there, or even if you got in there at the 78, if you love the 78, but again, we talked to you, there's a little bit more. You had to be a little bit aggressive to take the 78, but if you did get in there at 77, you got a nice little pop back up here. So resistance would be around our 84 level, which is our pivot. Again, if anybody has any questions, feel free to ask in the chat. We kind of walked you through how we would adjust this first level of support here, and it all depends on your risk tolerance and how you manage those trades. And again, how you enter those trades are important as well. And obviously, if you we talked about how a little risky the 78 was because of the price action, and then we adjusted a little bit. You adjusted a little bit to the downside based, again, depending on your scale around that level. Maybe you got in there at 77. If you didn't, then you waited for 72. That's also an acceptable trade. Again, everybody here, you have to understand the risk and then trade it according to your risk tolerance, which makes you comfortable trading. Let's remember that. Again, if anybody has any questions, again, feel free to ask in the chat. We really don't mind questions here. Kind of walked you through this level here a little bit based on how we just missed it by just a touch, and then how we had to adjust or how you didn't take the trade at all. All of those are definitely acceptable opportunities.